For more on the economic impact of this change, let's bring in Joe LaVorgna, Managing Director and Chief Economist for the Americas at Natixis. He also served as the former Special Assistant to the President and Chief Economist of the National Economic Council during the Trump presidency. Joe, we'll have you back on another time to talk about inflation and antitrust, because on this, I would think that it would be somewhat helpful, stimulative for companies that small and large to get workers back at work at a time where they really need them.
We have a 4.2% unemployment rate. We've got roughly 2.5 million more job openings than there are people to fill them. So anything that kind of gets the economy moving back in a safe way, if the CDC says 5 days, that's great. It just means people can get back to business quicker, more economic activity, more spending, more production, more outcome. It's a supply side story. I think it's great news.
Joe, I know that you have a slightly more bearish outlook for the economy next year. Does this change in guidance affect that at all, and outline why you are more bearish than consensus?
No, well, for this doesn't. I mean, look at the margin where economics often works. This is good news. It'll keep the economy hopefully more operational than otherwise. So this is great. My bearishness stems much less from the variations of the virus, but rather the fact that much activity was pulled forward because of the extraordinary fiscal stimulus that gave us a boom in 2021, but unfortunately likely a bust in 2022.